sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video, this is going to be the part 2 of the previous video I made. I think it was about like 2 weeks ago at this point, going over the halving portion, or the Halvening portion of my overall cycle, phase cycle theory, etc. of Bitcoin and its progression over time. If you haven't already seen the first one, or if you're new to the content and you want to go back and watch that one first, the first card at the beginning of this video will be that video, but I will briefly kind of just touch on what I mean by phase cycles, and then also obviously the epic as well, according to Bitcoin. But here, this is just going to be the one chart I'm going to be going over in this video. So we can see this red box right here. So going back to inception to the high set in 2011, approximately $32. This right here, the red portion, is going to be the very first cycle of Bitcoin. The purple box right here, purple portion, is going to be the second cycle, and then this third portion right here is going to encompass the third cycle. So before I'll just go ahead and get to the halvings first. So back here we can see November 2012 was the first halving, July 2016 will be the second, May 2020 is the third, and the fourth halving is right now. If you just go to the many websites there are that are projecting the next halving date, obviously next year, 2024 is going to be so. It's likely going to happen around really March to around July, really more so around March, April, May, and June is more likely when it's going to happen. More specifically, the websites that'll try to pinpoint when the next happening, typically they're putting it around more so March to May. Right now this black line currently sits on May of 2024, but in general this rough range right here, so this red range, will likely be where the next halving occurs, whether or not it's as early as March, perhaps even February, or perhaps even as late as around July, maybe even August, just within that general range, kind of a little bit into 2024, pushing towards around halfway, maybe a little bit halfway, but like I said, most likely around March, April, May will be when it actually ends up occurring. But as I've briefly touched on in recent videos and more in depth in further back videos, I am projecting in a prediction type manner that what I think is a likelihood is that what we'll start to see is what I'm going to call a gap halvening, where each time we've seen the halvening so far, going back to 2012, 2016, and 2020, you can see, and I have these with blue dotted lines, and this one right here of 2024 with pink dotted lines for a reason. Each of these obviously very clearly have been bullish halvenings, I personally believe, and this goes back to my phase cycle theory according to the Epochs, which is why, if you haven't already watched that previous video, it would be important to go back to that video, because that is why I have this specific fractal pattern playing out right here, because that is what lines up with where we currently are within our current third cycle. What we are in is the super cycle, or more accurately, according to the way I look at it, would be just labeled as a super phase. And the first one, quickly, is just what happened from around November of 2012 all the way to the high of December 2013. That was the second super phase or cycle, and then the third super phase or super cycle would have been around March crash to what I'm projecting to be the next high. This sometime in generally very, very end of this year, perhaps not even really then, but it'll top out more so January, and it could likely extend to around halfway into next year, maybe around 7 to 8 months, just in general. More realistically around beginning of next year, pushing 6, 7, 8 months into next year. like I said in the previous video, right here you can see with this blue pattern, you see it's going to be a double top. It will be similar, and as I've been saying for quite some time, the next upcoming bull run, because I believe we're going to see a bull run. I don't believe we're going to see a relief rally, again, according to the phase cycle theory that I use and that I have found while looking at the charts. I believe will come up and it's going to be not completely identical, but the move will be very, very similar to just roughly march all the way up to this double top. What I'm not necessarily sure of is whether or not we will get a double top similar to how we did back here previously. So that would be if we end up playing out like this blue pattern right here and making that more clear, distinct double top. If not, then what we would likely do is we'd obviously come up and make this first top right here, and then we'd start to kind of follow this purple pattern a little bit more, and then we would just make a lower low instead of making a higher top, likely printing some form of bearish divergence at these highs or this high range. And if we actually take this blue pattern, it's still essentially, this bear market would still play out the same as the purple. So you can kind of just imagine this blue pattern kind of just connecting into this purple pattern, and just this kind of overall general just kind of slanted downwards bear market. And and then after, what we would see, assuming this is correct, we come up at least as similar to what I have drawn on here. We would enter this portion right here. This would be the next phase. So this would be phase 2 of a cycle. We would enter similar to the top of 2013 into the bear market 2014-15 into the high of 2017. It's going to be extended in time. It's going to take longer to occur, as you can clearly see right here, and the gains are not going to be as much either. This goes into the lengthening of cycles, phases, etc. Also the epochs, and then the diminishing of returns in a bull market, and the diminishment of drawdowns in a bear market as well. We've also seen, I've been seeing that as well. But outside of that, according to this Halvening, what I do see happening is I believe we're going to see the first, like I said, is it going to be a gap Halvening, or you could kind of just more clearly call them, we're going to start to see eventually in Bitcoin's maturity over its history, assuming that the world doesn't completely collapse anytime soon, nuclear war doesn't devastate everything, assuming we still have at least a good 20 to 50 years less, I think we'll start to see this play out. As I said, we've seen nothing but bullish Halvenings so far. I believe what we will see, if I am correct here, we will see our very first bearish Halvening, with the upcoming Halvening lining up with this top up here. As you can see, if we go all the way down to our first Halvening with these time measurements down here, the first one to the second one was 44 bars, and I took one back a little bit further. I mean, obviously you can clearly see it doesn't line up right when Bitcoin started, but it's it's essentially accurate. So you see 42 bars, obviously starting from the first one, the second one, it's 44 bars, then going from the second one to the third one, that was 46. So we see a difference of 2 there, or an addition of 2 there. So what I did was I just added 2, and it does accurately line up with when the next one is being predicted by most websites. Like I said, most likely March to May. So likely, if I had to guess, we'll continue to see this similar pattern play out. If I had to guess, we'll likely just continue to increase according to this monthly chart by about, I'll just give a range around maybe 2 to 5, 2 to 4 bars or so every time we go into the next Halvening. So if we take it out once more, 48, now it's going to be 50 up to this Halvening. This would be a bullish Halvening. Once again, this is if my price projections end up playing out at least somewhat accurately, and the phase cycle theory that I have is actually true to the overall historical progression of Bitcoin's price. And it will essentially line up with right when we're, in this phase 2 of this cycle that we're in. And just to quickly go ahead and denote it for where we currently are, this area right here is, let me redraw that. This area right here is phase 1, and then this area right here is phase 2 of a single cycle for Bitcoin. And to quickly redefine it, an epoch is 2 phases, and the reason why I call it an epic is because after we have one epic or two cycles come to a completion, you then can actually begin to have affirmation and confirmation of the phase cycle theory that I am going on about in this video. So this one will line up, the 2028 Halvening will line up right when this phase 2, this purple fractal pattern, is heading back towards this previous high range back here, heading towards around just generally 100 to around 150,000, heading back up towards that to eventually break that and then head towards what is likely the next high, I believe, and a lot of other people do as well. For example, Kathy Wood has stated it many times, Michael Saylor, and obviously a bunch of other people that are prominent within the Bitcoin space, and plenty of other credible technical analysts as well. If Bitcoin, and I guess it's not necessarily an if it's really only an if, like I said earlier, if the world collapses, etc. But Bitcoin will inevitably reach $1 million, assuming we do still have around at least another 15 to 50, 20, 30 years left. And then I believe, like most other people, as I was saying, that that's more likely going to occur pushing the end of this decade, no earlier than 2028, no later than 2032. Right, I have this fractal pattern taken out to December of 2029 just to kind of put it on a middle ground of those the 4-year date range that I gave as well. Also, this TradingView recently added these new candles, this high-low candles. I really like to use these. Recently I've been using them a lot. For those of you that are familiar with the channel and the content, I'm sure you've been able to notice, but these candles actually provide a good linear resistance progression, unlike, for example, the Heiken Ashes or the candles that I've been able to find so far. But we can clearly see here that the price target that I'm speaking about for the upcoming phase 2 likely is going to be around $1 million to around no higher than around 1.35 million if I had to make a reasonable evidentiated guess there. Also, if I take the Fibonacci extension from this phase 1 down to its bottom, you can see here that the cycles 2 phase 2 topped out in 2017 at the 3.321. So if I do the same thing with the cycle 3's phase 1 down to top to bottom, so from 2017 high to 2018, 2019 low, you can see that the same thing happens right here, and it puts it right at almost nearly right at 1.4 million. So essentially it's around 1.3 to 1.4 million is where that is, but in general, like I said, around just 1 million to 1.4 million approximately is likely where it's going to go by around the roughly the end of the current decade that we are in. And then also this, as I was just now bringing up, this linear resistance also is confirming this as well, which it kind of helps me establish a more specific time frame for this upcoming high, being, like I said, December of 2029 is where this linear resistance lines up with that price target that I mentioned with respect to that Fibonacci extension. And the other thing I want to do is, because you can clearly see here, and I'll actually have to pull these Fibonacci extensions back up real quick, but we'll see here that, so as I mentioned in the previous video, that you can see that right here, just go ahead and put some highlights. So this top right here is synonymous with this top right here in our current cycle. So cycle 2, cycle 3, those two tops that are highlighted are synonymous. You can see 2.321 to 2.328 or 382, and that is where this one lines up as well. And you can see here on this one that if we do meet this Fibonacci point, then it will break slightly above the resistance that we're seeing here. So if I do the same thing right here, assuming that, or just making the general assumption that it's going to line up with this overall, the phase 2 or the phase 3 high, or my bad, no, phase 2 high, then you can see if I do that right there, because that is essentially what we're seeing right here with this ascending dotted resistance. It lines up exactly with this one. You can see how we did break above it right here as well, which is, like, again, like I said, synonymous with this one. You can see how we did break up a little bit right here for this first top, and if we go to this one right here, which, just go ahead and put another highlight on it, this right here and this right here, those two are synonymous. And if I were to go down in a lower time frame, you would see a very minor double top right here. Obviously it happened over a shorter period of time, given the whole, the lengthening, the phases, the cycles, etc., that most of you are probably already familiar with, as it's been talked about within the space for a decent amount of time at this point in terms of Bitcoin's progression. But for the most part, this is really just a wick that brought us above this, and the fact that we are in a new cycle, like I said, diminishment of the returns, realistically, it's not really anything major to point out as well. And also, as I did mention in the previous video that I posted yesterday, we could just as likely come down and not actually meet this 200 to 300,000 broad range, more reasonably 200 to 250,000. I mean, we could just as likely for the first high come up to a range of 143,000 to around 175,000. And then if we make this double top, in accordance to the blue pattern, the second high would be around 100, so 175,000 to as high as around 215,000, which would be lower price targets, perhaps more reasonable price targets, but at the end of the day, the higher price targets is what lines up with this Fibonacci retracement in accordance with taking it from the top, or the bottom to the top of the phase 1 bear market. The last thing that I did want to go over, actually, no, there's one other thing I wanted to go over. So, as you can see here, what exactly? No, it's not these Fibonacci retracements that I wanted to go over. But I guess I can go ahead and go over this as well while I just noticed it. You can see here that this bear market, so this is what I'm pointing out right here in this cycle 2. Once I go back up to the current cycle that we're on, we're going to be entering a bear market like this. You can see we came down and we bottomed out along the 1.577 and 1.618, 577 and 541 in terms of this 1.577 and this 1.541, 577 and 541. Those are prime numbers, so there's a reason why I'm using those numbers, not just using them because it's what lines up with it, with the price. But you can see that would be the drawdown for this upcoming bear market. And this upcoming bear market, I believe, if I'm correct in my projections, is going to be the most brutal bear market. So, I mean, what we've seen recently is going to be nothing compared to this upcoming one. Although if I take it from the 2021 high, I mean, see, that was 20 bars. If we top out roughly right here, yeah, 33 bars, it's still going to be drastically longer. I mean, it's 13 months longer, roughly, if this is at least fairly accurate. You can see we come down and we top or bottom out around that same general area, around just 50 to 60,000, which it also obviously just makes perfect sense because that would just line up with topping out or bottoming out or right along our double top that we set back here previously. So I mean, we'd see a price pattern that I pointed out in this video a long time ago, so something like this, which is essentially what we've seen. If we go back here, can see, so it's essentially what we're seeing is basically an impulse wave over a period of time. Don't take that in the literal context of Elliott waves, because technically the way that the price action has formed would technically be invalidated if you look at it within the explicit and objective context of how the rules for Elliott wave patterns are. I'm just broadly and generally pointing out that it's moving in that type of impulse wave fashion. It's following an over time, a general macro trajectory in terms of its price movement over time. But what I wanted to point out, I was talking about earlier, was, so if we take the Fibonacci retracement from, let's see, from the top, so the top of the first cycle to the very bottom of Bitcoin's price at essentially $0, we can see here that we are actually, or our current bottom, our current low, let me go ahead and extend these lines out here real quick. We can see here that our current bottom right here bottomed out right along the 1.618 to the 1.577. So Again, so I mentioned in my video yesterday, I'll just quickly go back to it. There's a likelihood perhaps we'd get this kind of like inverse megaphone bear market pattern that would take us down to, if we end up losing 20,000, down to 12 to 10,000. If not that low, then we would just retest around 19 to 18.5 thousand. I don't personally think that's what's going to happen. I don't think that's what's most likely, but it is a possibility at the end of the day. But also what I find very, very interesting is this is obviously, as you saw me draw on here, this is essentially perhaps the most viable and strong Fibonacci retracement you could use, because it's taken from the top of the first cycle down to the very inception of Bitcoin at $0, and you can see that we found massive retracement down to the 1.618, the golden pocket, that proportion of this golden pocket that I used from the 1.618 to the 1.5 right here. And this 1.618 of this, as I said, this very macro, very strong, very viable Fibonacci retracement. Also, 1.618 is right at 23.8 thousand, as I've been mentioning recently on many charts, many different time frames. 23 to 25,000 really seems like the where price is going to be retracing to here soon. Obviously, we've already come down here. This is a 2-day chart to 25, around 25.8 thousand. Right now we're kind of seeing the price stop a little bit and kind of fizzle out sideways just a slight bit. I do still personally think we're going to go down here and meet this 23 to $24,000 price target. I just wanted to point that out because this, like I said, very macro Fibonacci retracement going all the way back to Bitcoin's inception. Its very first cycle is putting the 1.618 right at the price target that I've been pointing out for, I mean, at least the last number of days, maybe like the last 2 weeks. I don't specifically remember how long I've been talking about it, but I mean, even if we obviously just get some wicks lower, I mean, it's still, I mean, obviously, generally it's just around this rough, just kind of range of this 1.618 right here is where we're likely going to retrace to, in my opinion. And then also this, obviously you can see this parabolic, or this logarithmic black curve that I've drawn on here. Each of the points that I've used for this, I just took it back to the second cycle, so the first bottom of phase 1 of the second cycle. I kind of just foregone really trying to connect it with the first cycle, because it's the parabolic nature of it. I mean, it's essentially just straight up, whereas I mean the second and the third cycle have more of a relationship, in my opinion. So you can clearly see how we've come down each and every single time we meet this rough range. And also, just to quickly point out, does line up with the upcoming bear market bottom. Obviously, it's not perfect. It doesn't come down to the inside of it like most of these done, like our current bottom, the March crash went down to it. Right here, we just basically glided above it until we finally reached the previous highs back here in 2013, and then had this major move towards the upside in towards 2017. But as I mentioned, this is right here. I'll just go ahead and highlight it. This is the bear market. After assuming my projections are correct, once again, we come up to the next highs that I've been talking about. We're going to enter a bear market like this, and we're going to come down here. We're going to make this M as a double bottom and make an overall massive W with an M in the center. And then we'll begin the upcoming, not the upcoming, but the second to upcoming bull market, which would likely take us towards the end of this decade. As I mentioned earlier, you can see here that even this first bottom didn't touch it, but it was the second bottom that went down into it. I mean, we could also, for all intents and purposes, I mean, this could actually more so be something like this. Perhaps we retrace lower than what I mentioned earlier. I mean, we could, like I said, 50 to 60,000. That's what lines up with that Fibonacci retracement I went over. But I mean, it's completely reasonable that we come down. I mean, and this general range right here is where we end up retracing to. I mean, that's not an issue at all. I don't think that Bitcoin will ever go below around 35, just approximately, give or take like $3,000, but more so around 35 to 40,000. Assuming what I'm going over in this video is correct, or at least approximately correct, I don't think Bitcoin will ever go back below, unless, the bear market's not over for whatever reason. I don't think Bitcoin will ever go back below, once it reaches new all-time highs, go back below 35 to 40,000. But outside of that, just making sure that was everything I wanted to go over on the price chart. I want to touch on this RSI here, just to kind of bring everything full spectrum for what I'm going over. And just to quickly touch on back on the halvenings once more, as I was talking about. So gap halvening, you could refer to this gap halvening as, you know, now we're going to start to see bearish halvenings and bullish halvenings. What we've seen so far is just bullish halvenings. So I think that this, and the reason why I'm calling it a gap halvening, as I've spoken about in the past, I believe what my specific prediction was that I brought up earlier but didn't elaborate on was that these gaps could quite likely adhere to the mathematical doubling sequence, so 2, 4, 8, 16, so on and so forth. So basically what we'll see is you can see from blue to blue, so from bullish halvening of 2020 to bullish halvening of 2028, we have a gap of 1 of a bearish halvening. So then from 2028 to 2032, 2032 would be bearish, 2036 would be bearish, and then 2040 would be bullish. So you can see, so we had bullish 2020, bearish 2024, bullish 2028, and then 3032 bearish, 3036 bearish, and then bullish for 2040. So we'll start to see a gap of 1, then a gap of 2, then we'll see a gap of 4 going on out to towards obviously around 2140 whenever Bitcoin finally is no longer being mined anymore. But so the RSI, been going over this RSI for a long time at this point. First thing that I want to mention is you can clearly see we've already come down when we hit our bottom range from June 2022 to December of 2022. We formed a bullish divergence like we did going back to 2015. Once again, just to reiterate, the bearish structure, the bear market structure of our current bear market is harmonically, in terms of the price movement over time, is most similar to the bear market of June 2014 to September 2015, and just kind of having an ABCD pattern towards the downside, with the mid portion of the ABCD pattern being a bearish Gartley pattern, and then the actual bottom would be an M pattern. Again, like I mentioned right here, we can see this M bottom. Let me use it different. You can see right here we have this kind of M right here, and that's what we did right here. If I were to go to a lower time frame, you'd see an M right here as well, but I'm not going to bother to do that right now. So for this RSI, like I said, bullish divergence in our underwater zone, I'll call it. So clearly, I think it's most likely, most obvious that we have bottomed out. I don't think those bearish scenarios I pointed out briefly earlier in this video and the video more specifically yesterday, I don't think those are going to end up playing out. We've exited our underwater zone at around RSI value of 36, and then we have also, as you can clearly see with our kind of our golden trend line right here at around 50, it's actually specifically at 54, a value of 54 on the RSI. You can go back to 2012. As soon as we broke above that, you can see going up to the price, you can see right here, bull market began. We go right here, 2015, we go up here, bull market began. We go right here to March of 2019, we just had our relief rally, and this is just because of the intrinsic structure of this phase 1 that we're in. This would be the W that would line up with this portion right here, going back to the second cycle. And then right here, this is the third cycle version of that, and it's just a massive W pattern. Again, like I said, first part of this video, if you haven't seen that, if you're new to the content, we'll have me more elaborately going over what I mean by this. If we go to our fourth bubble right here, so after the March crash, you can see once we cross this 54 threshold, going up to price, it's also when the halvening happened. The major bull market began, or at least the rest of the bull market finished, starting if you were to start back from 2018, 2019. So if we go to currently, where we are now, our bubble lining up very beginning of this year, suddenly made our final bottom within this progressive logarithmic curve. So likely what we're going to see is we're going to see the next bull market ensue. And also just to point it out, if we just zoom in here onto our current cycle. So if we look right here, we can see that let me change the color of this highlighter real quick. Oh my goodness. We can see that we are doing essentially the same thing. Like I said, I believe we're going to see something similar from March up to the double top we set right here. You can see that we've come up from our underwater zone. We're kind of making this double top, and then we're coming back down, and then we're finishing it right here. And I believe that is what we're seeing right here. We came up, had this kind of moment right here where we broke above. We came up a little bit higher, and now we're coming back down generally to this 54 zone. You can also just pretty clearly see that these are also just happening within the same rough range right here as well. So I mean, that's also just another thing to point out as well, on top of the fact that they very clearly, without really even pointing anything out, just look obviously very similar. But that was really all that I wanted to go on in this video, or go over in this video. I'm probably going to have another video come up after this, maybe sometime tomorrow. My general video that I usually upload, where I go over Bitcoin, Cardano, Ethereum, stock market, precious metals, and all the altcoins I've been going over recently. But all that being said, hopefully you enjoyed the content. Hopefully you're able to learn something from it, take something away from the analysis, perhaps to add to your trading scheme in order to help you. Once again, this channel is not meant for financial advice. I'm just uploading my ideas to the internet. But again, everything being said, I hope you all have a blessed day.